Perfect. All right. Well, welcome everyone to this presentation. Again, I want to thank the hosts for having us here today. I just listened a little bit to Ron's presentation. Very interesting stuff there as well. And of course, I want to wish everyone a very happy New Year before we get started. We're going to go through the next 40 minutes or so on something that is not only something that just makes sense, but mostly it's something that just very simply works. So we're just going to get right into this and give you some perspective on what we're talking about here. Just a couple of words on myself. I have been very fortunate throughout my career to have worked both on the buy side and on the sell side. What does that mean? Places like JP Morgan on the sell side, on the buy side, as a prop trader and fund manager, and now I run my own money management company and advisory services and membership services and things like that. And what's allowed me to do to work at these companies and in Wall Street was to be able to see how some of the very best traders and investors in the world actually make money. So I don't have to just kind of guess on how that works. So what I'm going to show you guys today is very much part of what I learned, and certainly the way that I apply to the markets right now in real life as well. Well, to me, it's really important that people understand that it's really crucial to keep things simple when it comes to trading. Most traders and investors make things much too complicated. The way to do that is by looking at too many conflicting data points for the most part. And the key thing here is to eliminate the noise, and really the more straightforward you process is, the easier it's going to be for you to be able to stick with that. In fact, the very best professional traders have a very simple but a repeatable process. And a lot of people think that means you have to look at a whole bunch of different data points and a whole bunch of different stocks. But I'll tell you, it's all about the process. And what I'm going to show you guys here in the next, like I said, 40 minutes or so remaining in this is really all about the process, which is the most important part of when it comes to trading and investing, really in any time frame. Well, to me, it's all about affording a lifestyle that you want to do. And what I'm going to show you guys today is something that I've managed to, over the years, develop into a wonderful lifestyle. And so let's just get right into it. Well, like I said before, institutional traders and investors have a very simple, repeatable process. So what I'm going to show you today is a highly effective and repeatable three-pronged trading process that I know that everyone can do. In fact, I'm going to make a very big claim here right now, and that is that I think that after you listen to what we're going to go through here, you're going to literally look at the financial markets in a different way. So that's a big claim, but I'll make it once again here today. Just so you kind of know what we're roughly going to be talking about, we are going to be looking for the most part at explaining to you why identifying investor mood or emotions is critical for success as a trader and investors. And I'll show you how you can consistently find the highest probability points to buy any given stock, index, commodity, or currency. And it will tie all this together to give you the blueprint to a really good three-pronged trading and investing approach. So I hope you guys are excited. Let's talk about this. Well, when it comes to candlesticks, does anyone in here use candlesticks, or anyone ever heard of candlesticks? Type in a yes into the chat box. I would imagine plenty of people have. Yeah, so in generally, when it comes to candlesticks, I generally think that there are way too many candlestick patterns out there and candlesticks to learn them all. Shocking as it may sound, I just want to use the most profitable ones, right? So you want to just focus on the ones that actually work. Has anyone here ever felt that there's too many candlesticks out there and too many jargony words around it? Yeah, I mean, that's been my finding over my nearly 20-year career as a trader and investor. And so we just want to focus on the things that actually work. So let me just quickly go through sort of the basics of the essence of a candlestick before I show you the secret sauce here. When it comes to candlesticks, of course, they work in any time frame, whether that's intraday or daily or 15 minutes or monthly or yearly. It doesn't really matter. So, but for this presentation purposes, what we're going to talk about is a candlestick time frame of 1 day, and we're going to be looking at stocks as the equity, as the asset class of choice. Although again, this works in any time frame and in any asset class. But essentially, you can have a down day, which is, you can see here, the left-hand candle, the one with this filled or black body, open here in the lower close, and an intraday range that extended all the way below the close and above the high. And conversely, you can have the opposite, which of course would be an up day, right, where you have an open here, a higher close, and again an intraday range that extended above and below this range. So what you end up with is this 4-point relationship between, in this case, the daily high, the low, the open, and the close of the trading day, or again, whatever time frame that you apply this to. And I'll show you guys a whole bunch of real-time examples here just shortly, so you guys can see that I'm not making this up, that this really, really works the way we are going to be showing this to you. Now, the great thing about candlesticks is that they're very visual. And why does it matter? Well, it matters because the majority of us, and this is according to academic studies, it says about 60% of us have an easier time learning stuff by looking at it through a series of pictures, right? Just think of like a 4 or 5-year-old child, or say maybe a 3-year-old child. They have a much easier time learning things by looking at it as a series of pictures. I know certainly my daughter had, because, well, she doesn't know how to read, right? But it's the same thing goes for anyone. Now, I'll tell you, in my own empirical evidence, we've done studies on this. I actually think this number is closer to 80%, to be really honest with you. So I think most of us have an easier time learning something by looking at it through a series of pictures. Well, that applies to candlesticks because they're very, very visual, and they're telling us everything we need to know if you apply it correctly, which is what I'll show you here for the remainder of the time. Number one, of course, these things are more visual than your typical bar or line chart. They're clearly visually representing us what's taking place on the chart in terms of price action, that's for sure. But most importantly, folks, and if this is the only thing you're going to take away from my presentation here, note that what investors, what candlesticks do, if you use them correctly, and I'm saying again, if you use them correctly, you are going to find that they're displaying to us investor sentiment and investor emotions. Okay, you can look at that as footprints of investors as well, but I like to think of it as investor sentiment and investor emotions. And let me show you why this is so powerful. The candlesticks work for the most part just because they work, okay? And we'll look at that in just a second. Now, the formations are very easy to spot once you've trained your eyes just a little bit. It's all about decision making without emotions, and you have very defined risk and clear stops all along. In fact, the reason I chose this picture here of this person is because you can see he or she has very well-defined risk right here. In other words, if this person goes beyond this point of no return, what happens? His or her, what happens in terms of risks? Think about it. Her risk goes from basically 0% to 100% instantly. There's no delay. And it's the same thing when we use candlesticks. We know exactly where we need to set our stops before we get into any trades or investments, okay? And the same thing also in the profit target. We have a pretty good idea where the profit target needs to be. So let's have a look at a couple of types of examples of candles so you kind of know what I'm talking about. So like I said before, there's way too many candlesticks out there. In this case, we can look at this hammer candlestick, which there is a gazillion different ones out there that people make a big deal about. They have funny names for these things. To me, I'll tell you, it's most of that is nonsense. It's just confusing. So let's just look at one candle. Let's look at the one up here, number 1 in the upper left-hand corner. Let's assume we had a stock here, and a stock was falling for, let's say, the past few weeks, okay? We came into this day, and you can see the stock opened somewhere around here, and then something happened intraday, and the stock sold off, but then it quickly bounced back, so much so that it actually closed maybe marginally higher for the day, but certainly at least closed at the very upper end of the day. Now, there's two ways of looking at this. Number one, we could think, okay, well, the way you hear that on financial TV is something like, well, we're off the lows, Joe, back to you. Has anyone ever heard that on financial TV? That say something like we're off the lows or we're off the highs? Now, that's actually not incorrect. It's a correct statement. The problem is that it dramatically understates what actually happened. Because what really happened here is that after, say, a few weeks of selling off, or it could have been just a few days, it doesn't really matter. The bears, the sellers, got very exhausted. How do we know that? We know that because the stock attempted to sell off, but it failed to stay down here. It closed all the way back up in the upper end of the day's trading range. In other words, what's telling us that the sellers got very, very exhausted within this time frame. All right. So when the last of the sellers sell, in other words, when the last of the buyers or the bulls sell, and the last of so selling gets exhausted, maximum point of bearishness gets reached, what's the only thing that can happen? Does anyone know? Right, the only thing that can happen is that the stock basically bounces, or at least it stops going down. Right, so that's really important in our sense. Have a look at another type of candlestick so you guys can kind of give an idea of have a better idea of how this fills in. And I listened to the previous presenter. He talked about engulfing candles. So let's have a quick look at what that actually means. Well, in this case, let's assume we had a stock and it was rising for the past, let's say, the past few weeks. Again, it doesn't really matter what the time frame is. Well, then it came into this day, and you can see after a few weeks of rallying, it gapped higher and opened up here on that day. But then something happened intraday, and the stock reversed very quickly all the way back down, so much so that it closed near the very lower part of the day's trading range, right? So again, we can look at this in two ways. We can look at it like they do in financial TV or in your financial media in general. They say, oh, we're off the highs, Joe, back to you. Now, again, it's not incorrect, but really what happened is that after a strong, let's say, multi-week, multi-day rally, the bulls, the buyers who had been in charge, they attempted to push the stock higher one more time, but they failed to keep it up there, and so the buyers got exhausted. There's no more buyers left, and when there's no more buyers left and the point of maximum bullish is reached, what's the only thing that can happen, folks? Tell me. Right, the only thing that can happen for the most part is the stock has to fall, or at least it stops going higher, right? And that's exactly what we're trying to get to. If you guys can consistently pinpoint these maximum points of bullishness or bearishness, then you have an unbelievably great opportunity to basically take the other side of what the rest of investors are doing, and that's really is really the key to making money in the markets. So let's have a look at a couple of different charts here to give you a better illustration of all this. So here's the S&P 500, and you can see we had quite a sharp sell-off at this point in time here, and at some point we ended up seeing these visually exhausting candles. You can see the sellers tried their very best to push that market lower for a couple days in a row, and you can see these long exhaustion candles, right? And that's not yet an immediate term buy signal, but it did tell us that the sellers were getting exhausted, right? So what is it telling us? Let's look at it again. Again, on financial TV, I promise you would have heard something like, oh, we're off the lows, Joe, back to you, and all that kind of stuff. Now, again, that's not incorrect, but what's really happening is that after a few weeks of selling, the sellers got very exhausted. They could no longer keep the market down. You can see for 2 days in a row, they tried to push that market lower, in this case, the S&P 500, but they failed to do so, and the bulls managed to rally the S&P back towards the upper end of the day's trading range. Well, on the third day here, which is called the follow-through buying day, we finally had confirmation that the sellers really were done and tired. Okay, doesn't mean that you can't sometimes get a bit of a retest lower again, to retest those levels. But for the most part, this is your confirmation day. And one of the big things that people don't do in markets, a lot of people that come into the markets, they just kind of jump into trades head over fist without any preparation whatsoever, or without any confirmation, I should say, even more so. But that's the key, is to wait for the follow-through confirmation. Let's have a look at another example here. In this case, we're going to be looking at the KBW Bank Index. If you're not following this one, I would strongly encourage you to follow the BKX. It's tracking the banking stocks, which are unbelievably important for the financial markets to follow. Well, at this point in time, again, you can see you had a fairly strong sell-off taking place in this particular part of the market. Again, this is financials or banking stocks in this case. And you can see what happened on this day. So about, I guess, a few weeks after the market sold off, the bears, or the sellers, tried very hard to push that market lower one more time. In fact, they tried to push the market below the previous lows here, but you can see what happened. The sellers got very, very exhausted. Very quickly, that seller exhaustion kicked in. The market rallied back right up to the upper end of the day's trading range, and the very next day, there was an up gap and a rally, which was our follow-through confirmation, and of course, the rest here is history. So we can also look at this on the bearish side. If you look at, for example, gold here, you can see we had quite a strong rally take place in gold, or the GLD ETF. over a couple of months here, and then we sort of start topping out, and then this day happened, right? And on this day, what happened? It's the inverse happened. Here, the bulls tried very hard to push that market higher and maybe get it back up to these highs and get another rally going. But what happened intraday? Intraday is a dramatic fake out rally. You can see that the bulls tried very hard to rally that stock, but they completely ran out of steam, so much so that when they ran out of steam, the bears ran with it and completely engulfed the previous like 4 or 5 trading days of price action, right? And of course, the next day we had follow through selling, and the rest here was history. So it's all about being able to determine what is investor positioning, or more importantly, what's investor fear or greed levels like in order to make money in the financial markets. I'm going to give you guys a whole bunch of more examples here in real time in just a few minutes, so you guys can see how this works in real time. But I'm going to skip this example in inch of time. Let's go through the 3-step process, or the 3 steps to the trade. This is really important, folks. A lot of people I know just talk about you looking at charts and just looking at an indicator, but I promise you that alone isn't going to do it for you over time. What you really need to do is have a process. And within this process, absolutely, you can use candlesticks. Otherwise, we wouldn't talk about it, because that certainly is what I do. Use that part of the process. But it's really important that you have a bit of a feel of what's going on in the broader structure of the market. Most people don't do that because they just don't feel like it's necessary, because they, quite frankly, they don't have the time, and they're too lazy, and they just want to, you know, it's easier to just look at a chart and make up a trade. And that's unfortunately then what a lot of people lose money when the market gets a little bit more volatile or turns. But it's important to have an understanding of what's going on in the broad market structure. And what does that mean? You know, where are we in terms of monetary policy, political environment, so on and so forth, and economic cycle, and so on. So like right now, for example, when we look at like just my own interpretation of what's going on right now from a monetary policy perspective, of course, interest rates are going higher, albeit slowly so, but nonetheless, we're in a tightening phase. In fact, that's one of my big themes for 2018, which is why I think we'll see more volatility this year. From a political environment, at least U.S.-centric, we probably you know, are at least somewhat more at bay than we were a year ago, or at least it seems like consensus is a little bit less worried about things, although there's still plenty of worries out there, but more or less economic growth, the economic cycle is still intact. So that's kind of where we are, big picture. So when you have that, you then look for stocks or sectors that will work well within that specific point in time. So like right now, for example, technology is still, and actually financial stocks are still things that should technically, historically, work very well in this environment still. And you make sure then you use that group of stocks based on this environment. And step number 3, you end up looking for these strong bullish or bearish reversals. Of course, you have to know how to find them, and I'll help you about that in just a minute. But you can then look for these strong bullish bearish reversals that I just showed you to pinpoint trading ideas, okay? And in fact, and here's a bit of a tip, and I wasn't going to reveal this for you, but I feel how you call this, I feel I'm still in the holiday spirit, I guess is the best way to put this. And I'll just tell you this. So you can actually reverse engineer this entire process, and that's the really cool thing about this. In other words, if you find a very strong bullish bearish reversal like this, which I'll show you again in just a minute in real time, you can then go and make sure that that still fits into these group of stocks, and then of course then that the broader environment remains in sync with this group of stocks. So that's just a bit of a big picture of it. Now let's apply this in the real world here and show you how this worked over time and how it works. So let's go through the 3 steps real quick before we look at a few examples, and I'll ask you guys also to give me some tickers and stocks you want to look at, so I can show you how to find these opportunities visually without having to bend over backwards. So this is the S&P 500. Again, it's actually the same chart that I showed you before, except in this case we zoomed out a little bit. So here's what happens. At this point in time, and this is the point in time I showed you before on the chart, we received a lot of phone calls. I tell you, this was October 2014. I received a ton of phone calls from my clients, advisory clients, traders, investors around the world, asking me if this was time to sell. And so we went through the 3 steps and said, listen, number 1, the broad market structure at that point in time was still very much in favor. The Fed was still very accommodative. We still had a technically every single line was holding. And then I said, listen, let's wait for the week to close and see if there's going to be a bullish reversal taking place sometime soon. And sure enough, and this is a weekly chart, we waited 1 week and we had a massive strong bullish reversal. I called everyone up, said, listen, I think it's time to get back in. And sure enough, we had a wonderful few months here after that. Now, again, that's not for me to get on a high horse here, but what I'm trying to tell you is that if you have a process and perspective, it really, really works. Okay, so let me look at another example here. This is the same chart from before, this KBW Bank Index, or the BKX. And again, let's go and look at the broad market structure. Well, what happened first? I mean, number one, when we had this strong bullish reversal, which is the one I just showed you before in the daily chart, this is now a weekly chart. From a broad structure perspective, what happened here is when the banking stocks stopped going down, the reason for that was because the Fed was starting to threaten of rising interest, of hiking rates. This was in the autumn of 2015. And sure enough, they actually did hike rates for the first time in a long time in December 2015. This now seems like ages ago, but it's not that long ago that this happened. From a technical perspective, you can see we came into a strong multi-year area of horizontal supports. And step number three, of course, we had that very strong bullish reversal that I just showed you guys before. Okay, so you can see that by applying this three-step process, not only are you gaining perspective, but you're also forcing yourself to actually think a little bit before you get into trades and investments, and thereby you have a lot more perspective in order to also risk management and get out of trades when they don't do this. Now, this is very exciting for me, folks. This is something that took me, honestly, I would say probably 11, maybe even 12 years to understand. I would say maybe 11 years, 10 to 11 years. And that's this, and I'm going to tell you this right now, and this can save you a crazy amount of money if you listen to this. So please take note if you're browsing another browser, if you're checking your phone, or if you're not even on the computer. Well, I guess then I can't call you back. But if you're on a different browser, just switch back. This is really, really important. Okay. Don't do this, because this is what most people do. And raise your hand if you've done this before. You're only focusing on like 3 or 4 stocks, and you trade every single signal you get on these stocks. Or maybe it's a commodity, and you only focus on one commodity or a couple commodities or a couple currency pairs. I'm telling you, that is a good way to lose money almost certainly over time. Okay, here's why. Really high probability signals, like entry points for trading and investment opportunities, they happen every single day, but they don't happen every single day in the same group of stocks or indices or currency or commodities. Think about that, okay? Doing this is a very low probability strategy to make money. So people deplete their accounts this way. They stare at a handful of stocks and force themselves to take every single signal on this one stock. Whereas in reality, a good quality signal, and I mean a really quality signal, like something like where you at least have a 70, 80, 90% chance of making money, happens maybe once a month, more like once a quarter. That's the reality, folks, okay? And I'm not talking about a coin flip 50-50 thing that most people use in the charts and kind of, click around. That's what most people do. But if you want to have an actual high probability push to the market, you don't do this. What you do instead is this, okay? I want you to think about the world as being your oyster. What does that mean? Well, that means that you need to find a high probability strategy or signal, and then you look for that specific signal, let's say, across the universe of stocks or maybe even commodities or currencies if you want to. So let me ask you this. Why do you think, for example, that smart hedge funds are set up the way that they are, which is to say that they can trade more or less whatever they want, okay? It's because they understand this very simple fact. They understand there's opportunity every single day, every single week, every single month, more or less, but it's not going to be in the same stock. It's not going to be in the same group of stocks. It may not even be in the same asset class. Okay, so that's really what this all comes down to, right? And that's again, does that make sense to you folks? Say aye. Please raise your hand or say yes if that makes sense to you. This is unbelievably important. It honestly took me, like I said, 10, 11 years to really actually understand that. And I hope you can appreciate the value of this. If you can't, you need to revisit what you're doing. This is unbelievably important. So as a result of all of this, I will tell you the following. And let's quickly review what a bullish and bearish reversal is before we continue. A strong bullish and bearish reversal is the following. It's the strong bearish reversal is where buyers get exhausted, and convert vice versa for the bullish reversal. In other words, where the last of the buyers buy. And of course, you then still need price confirmation. You still need price confirmation, because unless you have price confirmation, you're basically gambling, right? And then, only then, you get to the highest probability spot to buy or sell any given stock, ETF, currency, commodity, what have you, right? So these are the highest probability spots to buy or sell. And it took me a long time to understand that. And thank you for typing in the information. Thank you, Henry, Laura, Bob, Michelle, Finn, all of you guys that typed in that you understand this. That's really good stuff. So let me introduce you to my solution on this and how I find these really high probability points. And it's called the beta reversal indicator. Now I'll tell you, I've never been a big fan of indicators and scanners. When I used to work at JP Morgan, for example, we had guys come in, I don't know, it seemed like every week, showing us new indicators, new tools, and quite frankly, nothing ever really worked or stood the test of time in different environments that I ever saw. But one day, about at this point, I think it was almost 6 years ago, I said to my friend, you know what, I've got this approach I've not been doing for 15 years at various shops, and now I'm doing it in my own company. And I wonder if we can't program one bit of this. So he went back into his shop, and he came back a couple of weeks later, and then we had to configure everything, and then it was literally like a 4 or 5 year project until we finally had it all done. But what we have now is this unbelievably high probability straightforward buy and sell signal thing on the charts, and it's absolutely beautiful. But let me show how it works, okay? It's all about keeping the context here. So for example, here's a couple ideas, and then I'll show you guys how this works in real time, and then we'll look at some real-time charts so you guys can see that we're not just picking examples here. So here's, for example, Tesla. We had a sell signal. You can see these red arrows fall through selling, and the stock proceeded to drop about 18-19% over the ensuing weeks. How about this stock? We had a sell signal here. The stock proceeded to drop about 13%. Then we had a buy signal a few days later. The stock proceeded to rally about 15%. Then we had another sell signal, and the stock proceeded to drop about 15%. Now, I'll tell you, this doesn't happen in sequence in every single stock all the time. This is a good example for illustration purposes. I'll show you guys some real-time things as well so you guys can see how it works. But let's move on to another. Here, for example, is Starbucks. This was just a number of months ago. You can see we had a beautiful sell signal here, and as you can see, the stock proceeded to drop about 7 or so percent over the ensuing few days. How about IMAX? This is another example here. You can see beautiful buy signal by the green arrows, and the stock proceeded to rally about 6-7 or so percent very, very quickly. How about an Apple? You can see here, green arrow, stock proceeded to rally a real quick 5-6-7%, and ultimately actually ended up continuing higher still. Well, after a few months of kind of playing around with this, and I was just amazed by how much time it saved me, I asked my programmer, my buddy, I said, listen, I'm not considering myself lazy, but I'd like to make this a little bit more comfortable if possible. So I asked him if you could maybe find a way to scan the market for this, or to build a scanner so we could scan the charts for this. So I figured, why spend hours a day looking for this stuff manually if I can have it scan for these things. And sure enough, he came back. This only took him a couple of weeks, I think even less, and it was absolutely beautiful. So let me show you how this works. So it ended up dramatically reducing my trade idea generation time. I used to spend, honestly, I would say I used to spend at least 2 hours a day searching for trade ideas. And now, honestly, I wrote here 20 minutes. I don't think I look for stuff for more than 10 minutes. I'm really honest with you. I don't think it takes me more than 10 minutes. So, and that's all thanks to the B2 scanner. So what we have is the scanner, and the way it works is you have 4 different scans. You have 2 bullish varieties and 2 bearish varieties. And all I do is I click on the ideas, and I pull up the chart, and I see if there's a viable opportunity. So I'm going to show you guys how this works. In fact, actually, right now, let me quickly just get to this right here. So this is, for example, the bullish scan. That's this one. They're all, I have them on a different. I can pull them over, but you get the point. I'll just show you this one here for right now. Otherwise, we have to make too much arrangements here in the chart. But you can see this is the bullish candle. So like, for example, one thing, and I'll quickly bring this down here so you guys can see. We'll talk about Adobe, by the way, in just a minute as well, because I know Ron looked at Adobe. I'll show you how my indicator found the Adobe trade. Absolutely nailed it so far over the past few weeks, and actually before then as well. But if you look at the for example, I think one thing I was looking at before was AIG, just because that's a stock that I personally I actually like to follow. Let me quickly get back to that stock, and you can see if I click on AIG, it's actually a stock that's developing a signal right now today. Okay, and that's all I do, and I see if there's a viable opportunity, and then we'll see if that makes sense. So let's see you guys type in some tickers you'd like to look at, and then we'll look at this in real time to show you guys that this works. Okay, that we're not just cherry picking things here. So that you can see that this really works. Okay, all right, so let's see. Let me just type in a few tickers here. Just give me 1 second. Let me just quickly give you guys a few minutes to type this in. All right, okay, sure. So let's have a look at, for example, who typed in FCX. Yeah, there's a lot of Prof 1209, whatever that is. Okay, here, for example, is FCX. This is Freeport-McMoRan. You see the buy signal here, which also was confirmation buying, and then boom, the stock rallied. Okay, so again, it's all about finding that high probability spot, which is what the indicator does. It finds a combination of it's a combination of candlestick, momentum, and trend. It's all within one algorithm, if you will. Let's have a look at, for example, Google. Okay, a lot of you guys are asking about Google. This is think or swim. Yeah, but this works in other things as well, of course. But here, for example, was a sell signal, so you can see the stock drop. Then we had a buy signal, and then we had it wasn't a sell signal, but it was a signal to maybe take profits. Okay, and then you always need to have follow through buying. So we just got a signal just yesterday in Google. Okay, and it was a confirmed signal. So now we're looking to maybe buy Google through a multi-week lens. All right. Yes, exactly. Is anyone here a day trader, by the way? Just curious. Anyone here day trading? Just so I can show you how this works intraday as well. Okay, so here, for example, was a buy signal in Microsoft. You see this? This was in October. I know a lot of you guys are asking. The point is, it works in any time frame. Okay, just don't, I'm not a day trader either, but it works in any time frame. Buy signal here in Microsoft, then you see the stock rallied. Then we had a sell signal, and sure enough, the stock went nowhere and actually even went lower by a few percent. So again, you can see how that works right there. Let me see. How about someone wants to look at the financials or the transport? So KSU is a good one. Yep. So here's KSU, sell signal, and then it proceeded to drop 4 or 5% very quickly. Right. This just happened. Right. I'm not making this up. This is Jeff asking that question over there. Yes, this works on weekly charts, guys. It works on daily charts. It works on futures. Let me show you intraday. Okay, I'm gonna show you like, say, the S&P 500 intraday, and then you can do the math. It's gonna work. Just as well on any time frame. Let me just quickly bring up the S&P 500, the SPY intraday. 1 second. Let me show you how this works. Let me just bring up the SPY. 1 second. Okay. So here, for example, this is just a couple days ago. This is the SPY intraday chart, 5 minutes. You can see a sell signal. Again, exhaustion buying, follow through selling, just like I showed you guys for the past, whatever this has now been 35 minutes or so. And then sure enough, it dropped. The key here is confirmation. You always need confirmation, right? But that's why we built this indicator so that it allows you to find these opportunities. How about IWM? If someone else wants to know about the which is the Russell 2000. This is just this morning. Here, watch this. This is the Russell 2000 this morning. Okay, look at this. If you have a valid signal, guys, Assad, this works probably not 85 to 90% of the time. If you have a valid signal, okay, a confirmed signal, right? That's why I teach you how this works. So here's this. This is a sell signal from this morning. Like if this is like, you know, if whatever the market opened, you see the sell signal, which was already in self-confirmation selling, and the Russell 2000 since is about 30 basis points lower. So this is intraday, right? This is what you guys asked for before. Okay. All right. So let's go back to the daily chart just so you guys can see how this stuff works. Let me see. All right. Now, someone wanted to look at, you're very welcome. Intel, sure, let's have a look at Intel. Here we go. Intel, the last valid signal received was in November. That was here. You see that down arrow, which was confirmed a few bars later. You would have ignored this up arrow because there was no confirmation buying, right? So you wait until you have confirmation selling after a down arrow. You wait until you have confirmation buying day after an up arrow. In this case, the down day, the selling confirmation day happened first, so you could have shorted or sold Intel, right? Does that make sense? I just showed you Google before, and a lot of you guys are asking on Google. First Solar, sure, we can look at First Solar. We actually did a trade on that just a few days ago. Here's First Solar. We had a buy signal here on this day, and the stock then quickly rallied. We've had a few since, but the stock has been going nowhere flat ever since, and so there's no valid signal. Again, there's no confirmation buying in either of these cases, right? It was flat, stuck in a range, right? You guys see that? Okay. All right, cool. So let's move on. I'll show you guys more examples in just a minute, but what I'm going to offer you guys today is my Ultimate Candlestick Bootcamp, which includes this indicator and the scanner. So what you're going to learn in this is a way to look at the market in a low stress, high probability way and nailing these bullish and bearish reversals. Let's see here. I would like to send you this here. Yeah. So usually we charge for this the $500. It includes a 30-page course guide, and includes includes the indicator and the scanner. And today it's only $197. So it's a steadytrader.com/one. That's ONE1. And here's all the stuff that it includes. We have bonus webinars, okay? So we do bonus webinars on this probably at once a month for the next few months, which means that we can do these bonus webinars where we teach you how to use the indicator and the scanner along in different market environments as well. I'll show you all the indicators, all the tips and tricks on how to use the indicator in all different environments, and they're fun sessions, and you always come prepared with questions, and they're always recorded as well. I'll show you what the indicator and scanning works in both platforms. Just 1 second, okay? I don't think this is for people who can't be patient. By the way, the indicator and the course. This is really for people who want who are serious about making money in the markets. I don't believe this. If you're just in it for fun, this is probably not for you. Better off going to Vegas, to be honest with you. I can show you testimonials here, but quite frankly, that's fine. Everyone can show you a testimonial. You're going to learn anything and everything you need to know about how to use candlesticks correctly, okay? And it's all in conjunction with this course as well. You're going to learn also, there's an entire separate module that I just recently added, a multi-time frame analysis using candlesticks, which is unbelievably important. Confluence zones as well, which I don't believe you can be a successful investor and trader without confluence zones. You learn about different breakout strategies, support and resistance, moving averages, and momentum oscillators and Fibonacci, all in conjunction with using the candlesticks the correct way. Yeah. You learn how to set your stops, the risk management strategy and mental aspect of using candlesticks and trading, and money management as well. So it's a jam-packed course. It's not overwhelming at all, but it's very focused on what you need to know and learn to make money in the market using this approach that I just showed you. Now again, it also includes a V2 reversal indicator and the scanner, where you'll be finding these super high probability points. Again, I'm not in this business to just take random trades that have a 50-50 chance of making money. I only want to take the highest probability trades, right? Like the 70, 80, 90% chance trades. And the only way I can find those using candlesticks is this indicator, okay? So here's how it works. Again, it includes today it's going to include the scanner as well. So it really makes looking for these trades an absolute breeze. It's available for Thinkorswim, for eSignal, TradeStation, NinjaTrader, and actually also for TradingView.com. The only thing is a TradingView, it only works with the indicator. There's no scanner on TradingView that allows you to scan for it. But TradingView.com, you can open up a free account. You just have to make a username and password. If you don't have any of these, Thinkorswim, I believe you can open a free account. NinjaTrader, I know you can download for free as well. I think one of those. So if you don't have one of these platforms, I would urge you to get one of these. I think at least Thinkorswim, NinjaTrader, and TradingView are basically free from what I gather. Okay. Yes, the scanner is available for Pam. Which platform are you for? The scanner is for all the platforms except for TradingView, just because TradingView doesn't allow us to scan for the indicator, but it's available for all the other ones. Okay. So let me show you a little bit more of how all this works, and I'll show you some more examples as well in just a second. Okay. And again, the bonus webinars, like I showed you, are certainly included as well. Okay, well, JB Trek, you need to send an email to my support team. Okay, I don't know when to send. I mean, my support team responds in like half an hour. So you need to send an email to support@thesteadytrader.com. I will personally call you if there's a problem. Okay, but they will respond very quickly. Yes, you can use them. You can use this in all the platforms, TJ Pacman. It doesn't really matter. It doesn't really matter, you know, if you use it on one or all of them. I don't care. You don't have to buy it several times. Yeah. JB Trek 900, doesn't it? You get that? I take great pride in our support. I personally look over their shoulders. So if they didn't respond, I almost guarantee your stuff went to your the email that they sent went to your spam box. But I will personally call you if there's a problem. In fact, if you want to set up a call with me, regardless, I'm happy to do that as well. So let's have a look at a few more examples here. Okay. Let's see here. Let's see here. JB Trek, I'm not getting an answer for you, man. I need to know if this is making sense to you, that you can reach my support guys. Okay, so some other people before asked for an example in Twitter. Yes, it'll work. Pam, I just showed you before on the SPY. If it works in the SPY, it's going to work on the ES. Okay. Yeah, this is a one-time only, Brandon. This is a one-time only. It's the steadytrader.com/197. It's it. You get to keep the indicator forever. There's not an annual fee. It's not a yearly fee. Nothing like that. Okay. Pam, did you see that as well in ES? Okay, JB, you need to please send another email. I don't know when if you sent that email 5 minutes ago, then obviously they're not going to respond because it was 5 minutes ago. But send an email, please. Okay, send another one. If you haven't received an answer in a couple days, then something went wrong. Then it went spam or something like that. All right, but please send it again. If I don't know when, if it's been more than a day or two, then something went wrong. Okay, so let me show you guys another couple examples. So here's, for example, is Twitter. Okay, we had a beautiful buy signal in Twitter take place in November. Then we had, and you can see this one was qualified because it was a follow through buying day here, right? This one, why was this not a qualified signal here? Does anyone know? Why was this signal here not a qualified one? You see where my cursor is right now, where the down arrow is? Why was this not qualified? Anyone know? Yeah, it's good stuff. It's good stuff, Mike. No, it doesn't work on Metastock. Okay, it's not qualified because there's no follow through selling. Okay, remember we just talked about for the past 40 minutes the importance of follow through buying and selling. Okay. All right. I can't. Here you go. All right. Yes. No. Exactly. No follow through selling Assad. Exactly. So, but this one, why was this qualified? Because this already was a qualified up day. You see that? And sure enough, that was a beautiful jet. So you could have remained in this position all along. Well, again, this is the trick. The details of this you have to learn in the course because I only have 45 minutes to explain this to you. But that's why we offer these webinars on an ongoing basis. The course that never goes away, and of course the indicator and the scanner that's available for it's a one-time purchase. That's it. You'll get to keep this this forever. Okay. Yes, it's going to work in a 1 minute chart. It works on daily charts. It works on any time frame you want, right? But to me, the important thing is that you use a scanner and look for opportunities. Right, that's one of the key follows. Okay, excellent. All right, folks. Well, listen, my time is over here, and I'll pass it on to the hosts. I want to thank everyone for their time. Again, I'm going to wish you a very, very happy New Year, and have a great 2018.